Look, I'm pretty I pretty much just lay it all out. There's really not a lot of secrets, but the thing is most people don't know this stuff. But it's all in the research of the PhDs who've studied it, but they watch TV, they listen to commercials, and they say, oh, Ken Fisher, he hates annuities, or this. They're getting, Dave Ramsey says you only should buy term insurance. That's ridiculous. Less than 2% of term policies ever pay a death claim. The only policy that matters is the one that's enforced on the day that you die. So, I mean, these are the things I talk about. No, that's the stupidest thing I've ever heard. You can Google Forbes, and Tom Hegna got an article in there that I was written, and it's a great bond substitute. So if the average person is invested 60% stock, 40% bond, I wrote a white paper. The 60-40 portfolio is dead. Long live life insurance and annuities. And all I said is for young people like you should be replacing your bonds in your portfolio with a whole life policy. It's a bond-like return, but you don't have the interest rate risk. Right now, bonds are only paying 1 or 2% to the upside, but if interest rates go up, those same bonds could fall 20, 30, 40, 50%. So why would you want to have that risk? You're going to do better with either whole life insurance or an annuity as a bond substitute. It doesn't have to be a stock substitute, but as a bond substitute. That's why you would buy those products. Because apartment buildings, look, real estate fits into what I talk about, but it fits that fits in number two. Optimize the rest of your portfolio to protect yourself against inflation. It should not be considered guaranteed lifetime income. Look, I was in Phoenix, Arizona for the last 30 years, and for 20 of those years, you could not lose money in real estate. You buy something, you could sell it for more, no matter what. And then the market crashed in Phoenix, and everyone I knew who was a builder went out of business. Most of the realtors went out of business. They went bankrupt. Now you can say, well, you can still rent your place. Yeah, but let me tell you what, there were a lot of people that lost a lot of money in real estate in Arizona. So I like real estate for protecting against inflation, not for giving guaranteed lifetime income. It is not a substitute for guaranteed lifetime income. And besides this, I've seen so many people, they buy real estate when they're in the 30s and 40s. Oh, I'm going to get rich. I'm going to reach. And then guess what happens? They're 70. And you know what? That building now is 40 years old. It needs a new roof. It needs a new heater. And I said, do you want to deal with that when you're in your 70s? Oh, I'll have a property manager take care of that. You know who property managers take advantage of? The 75-year-old who can't remember what he had for breakfast. Yeah, we had to put a furnace in number 7. We had to put a new roof on number 12. It's like a ball and chain around your neck when you're in your 70s and 80s. So real estate sounds great when you're in your 30s and 40s. Wait till you're in your 80s and you've used up all your tax advantages. Now it's all taxable. Now you're locked in. The places are falling apart. I'm not saying I'm against real estate. I'm not. It fits in the system, but it's not this wonderful thing that everybody says, oh, it's the end all of end alls. It's not. It's not the everything that everybody thinks it is. It can play a role, but it shouldn't be your only thing. Just in case retirement. They don't touch their money. They don't touch their money. They don't touch money. I say, wait a minute. You told me you were going to join the country club. You're going to buy a new boat. You're going to go on a cruise. You're going to see the world. Have you done that yet? Oh, no, I'm saving just in case, just in case. So they don't touch their money. Then they die. Then what happens? The kids join the country club. The kids take the cruise. The kids see the world. I tell people, I want you to join the country club. I want you to see the world. Leave your kids' life insurance. Spend every last nickel you got. Last check you ought to write ought to be the undertaker, and that baby out of bounds.